Hello everyone, it is Evan from the Trade Risk on Sunday, August 16th here with a market recap video. It's going to be a little bit quicker this time. We're just going to spend some time analyzing the current market environment. Then we're going to look at some leading and lagging sectors to help us identify some opportunity in the week ahead. Probably do with some trade ideas later on, either in the stream or on a separate video. Now let's jump into things. We're looking at the SPY ETF that tracks the S&P 500. You can see we closed pretty much dead center of this range, 209.42. And if we look at a weekly chart, we did manage to close up 71 basis points this week. So we did make some upside progress. And you can see, look at the size of the tail down here from earlier in the week. If we go back to a daily chart, you can see this wide range bar here. This was Wednesday's candle. We were all the way down here testing the lower end of the 205 levels before we found a sharp reversal and we trended higher for the rest of the day on Wednesday. Thursday and Friday, basically sideways days, kind of consolidating that and getting ready for perhaps the next move. So I think the big takeaway here is we once again held this very significant support level that is growing in significance down here at 205, this general area. I think it's becoming that much more important. I think if you're a bull, if you're long this market on multiple time frames, really now, 205 is a great level to just manage risk against and just draw your line in the sand as a must-hold level to either trade alongside or to have, you know, a certain amount of exposure. So I think this is a really good clear-cut line in the sand. What we need to see now is after this test, after this potent reversal that we saw, we need to see again some continuation to the upside this week. We need to get off of this level, we need to stop retesting it, and we need to try and, you know, eventually work ourselves higher out of this range. Not saying that that is going to happen, I'm just saying if the bulls are going to sort of make it count with this week's reversal, they need to get some traction next week. So that's what we'll be looking for. A lot of work. They got their work cut out for them. We still have plenty to go, breaking above this 211 all the way to 213. This whole sort of band of resistance up here is ultimately what needs to get taken out to break this market out higher in the S&P 500. Downside, of course, like we just talked about, is 205. So classic range bound behavior, nothing's changed. Everyone is very aware of this range now, so it's becoming very obvious, and there's a lot of people with these same levels, give or take a point, that they're watching. So should be interesting to see how it shakes out. Could be in it for another month, 2 months, 3 months, who knows? But the story really hasn't changed this year. And again, we did see that demonstrated this week by the sharp reversal down here when the market tried to break down. So let's look at some other markets. The IWM, similar situation here. If we go to a weekly chart, up basically 40 basis points on the week, so relatively in line. We've been talking about the underperformance on the daily chart. You can see we have a classic lower high and lower low pattern here as we come back down and retested this big range from earlier, from the earlier range that we broke out in January and February. Bulls need to reclaim 120.50. Fast moving averages still racing lower. We need to see this hold, and we need to see some traction build here, get the small caps in play. That ultimately will help the bull case if we can get these guys back leading us like they were at the beginning stages of the year. Now, speaking of leaders, Q's still trying to maintain that status as of the past few months when they really took control over this breakout back in July. We're now back below 111. We want to see if the bulls can get us back above it and start to try and break this out. Still a pretty healthy looking market, all things considered, and we want to see if they can build off of their reversal as well from Wednesday as we retested sub 109. Now let's quickly look at just a few sectors here. It's the boring ones. IYR, this had a hell of a week today, up 1.61% for the sector, is very good. You can see, I mean, it's still a little messy, but it's been essentially trending lower for all of 2015, and just in the month of July, you can see it finally stopped, you know, heading lower, and it's catching a bit of a bid here. You can see rotation coming in. So IYR, the real estate index fund, is a sector that is definitely seeing some rotation. Along with that is utilities. They had a nice week as well today, up 2.66%, even stronger week for them. You can see they've been same exact camp as the IYR. They've been in a downtrend for all of 15. They're heading up now, breaking above this cluster of supply around 45.30, so definitely rotation into these two sectors. Now, along with those, the consumer staples are still doing well. They're still holding this breakout. They're above. They're sitting right on these fast-moving averages, but all things considered, they still look really healthy. So look for opportunity in that sector. And even the financials, we had a little scare here on Wednesday. They were hit particularly hard, but they did manage to gain some traction into the end of the week. They closed pretty they closed recovering all of that initial damage, so they did manage to make some forward progress on the week, above still trending higher on the weekly time frame. So keep an eye on that. We need to see this get back above 25.30, 25.50 or so. The financials could see them start to perk back up again. And on the downside, we still have semiconductors, which are really getting hit hard. They are now very, very much underperforming on the year here, and even on Friday and towards the end of the week, when a lot of things were recovering, we did not see that in the semiconductors. So, eventually I'm sure a bid will show up, especially on a weekly chart. You can see how strong this uptrend has been for quite some time. So eventually dip buyers will step in here and support this market, but we don't know when that will be. So for now, it's an avoid until the bulls can start to stabilize. Energy, this has been the dog for the past few months, especially as crude oil is now making new lows here, but it did perk up this week. There was quite a bit of a positive divergence here in the energy sector, so keep an eye on this. Maybe we found some short-term bottom here right around $66. Still doesn't interest me all that much, especially the way some of these fast-moving averages are, and just this recent price action is generally pretty sloppy. But let's see if a range can develop here, get a retest, or just go sideways now for some time. And I think the energy sector could be something worth for a bounce. But that's it. That's what I have for today as far as the market goes, market environment and sectors. Stay tuned hopefully later today for some more trade ideas on the week. And as always, thanks for watching. I will catch you next time.